I want us to take note that this video is for educational purposes only and does not constitute financial or investment advice. It is considered accurate and correct at the date of publication. Changes in circumstances after the time of publication may impact the accuracy of the video. I need also to understand that trading involves significant risks of loss and is not suitable for all investors. Past performance is not a guarantee of future results. So welcome as we go through this strategy, breakout strategy that I can use in trading Euro US dollar. Before we get into the charts, to understand that nature of this pair or Euro US dollar, we have the euro and then we have the dollar. The dollar is the universal currency in forex trading, and the US dollar, as everyone knows, is the economic powerhouse, world-based economy. Euro, at the same time, is also a currency that is traded of exchange at in a zone where the economy is also stable in the euro. So these are two powerhouses. They are two powerhouses economically, and their involvement in the forex market brings significant impact. There's a lot of activity that gets involved whenever you trade these two pairs, and especially when there's an overlap when the markets in the London stock market, the New York stock market, when the market opens 10 a.m. East African time in London, that is the London stock market, and then at the same time the New York stock market opens at 4 p.m. East African time, and so whenever they overlap at 4 p.m. in the evening, there's always a lot of activities that happens in these markets. There's a lot of liquidity in the market. This liquidity pushes the market significantly. As you're going to learn, before you trade this pair, you have always to ensure that either news is coming or there's no news coming. And these are sites where you can always check this stuff. We have the Forex Factory News. You have Forex Factory News. These are places where you can always check where news is and the impact of those news on different currencies. So before you trade, you have to go check where the news coming. We have different type of economic news that affect the market, and one of the main ones is like the one that is coming this next Friday is called the NFP. NFP is news that offers data on employment rate in the US, employment claims, and anything employment, and is always released by the Fed reserves. Because these news, they trigger the momentum of this particular pair. Having said that, we want to get into the charts where we are going to see different patterns and chart recognitions that we're going to use to ensure that whenever you see them, then you can use that to trade. So we're going to look at consolidation patterns. We have consolidation patterns, we have support and resistance levels, and then we see how these particular patterns affect these markets. So consolidation mostly happens, we have ranging, and the market is ranging within a particular area. A market that is ranging, for example, a market that is ranging behaves this way. We have a market that is ranging behave in this particular manner. So a market that is ranging behaves this way. You can see a market moving within a particular zone, particular area within a range. So such a scenario is common to a market that is ranging. And then when this market is ranging like this, then at some particular point, the market might behave like this. So once the market breaks out, we get out of the consolidation range. So once this breakout happens, then that is the time where we start looking for entries and conditions that are required to enter into this market. So you'll realize once the market breaks out, we start looking for entries. So which is the condition for entry here? So on this side, upper side, we have this upper side, we have the resistance. This upper part is resistance, and then the lower side is support. So the market comes and operates between these two zones, support resistance. So but the market is moving within a particular range. So this one, when you see a market moving within some particular area like this, then we call this a ranging market. I mean, not ranging, literally ranging, but it's also part of consolidation. So it's a particular pattern, as you can see. Then the market, when the market you see happens here, the market comes particular this area here, and then we call this one, we call it breakout. So the market breaks out at this particular area, then this one, the market breaks out. So there's a breakout at this particular area. So once the market breaks out here, and this is the time now when we invoke the breakout strategy. So what happens when the market breaks out from a range like this? Then we have two types of entries. The first entry is called aggressive approach, where you enter immediately the price breaks here. Immediately the price breaks out here, you enter the market. Second one is where is called conservative, and mostly this one is meant for people when you're doing risk management. So you have the conservative approach, where you wait for the market to come back to this particular zone. The market comes back to where the breakout took place, and then now the market goes up. So this one, when this happens here, we call this one a retest. So the market does a retest. So there's a breakout and a retest. So the price breaks out of a particular range and then comes back to retest the zone, and then the price moves the other side. If say this market was to sell, then this is what happens in this particular circumstance. And this particular circumstance, so this is what happens here. So what will happen here is that when the market comes here, the market goes down like this. Price reacts to that particular area. It's more or less the same, but in the opposite direction. You can see the price comes down like this, and the price continues down. So mostly, okay, so we have we have the resistance zone, then down here we have the support. So what happens here is that as we already discussed about breakout in the resistance zone. So you realize, so the price, you can see the market coming, touching the base, touching the support levels, and then bouncing back. For the first time it goes up, then also again comes down here, then comes here, then finally the market comes, and then this one is the breakout, and then the market moves down, and then this one is the retest. So there's always a breakout here, as you can see. I've already discussed about this on the. So there's a breakout here, and then on this particular area, and this one here, we have the market breaks out, and then retest takes place. So retest takes place at this particular area. So always, when the market is breaking out of consolidation, out of a particular pattern, there's always a breakout. So when we are trading, we work with the breakout. So once the breakout happens, then we wait for retest for conservative traders, and for aggressive traders, most of the time we make entry at this particular area here, and then obviously we will use whatever you're targeting. You target risk of 1 to 1.5 or 1 to 2, 1 to 3, depending on your account, which you're going to discuss as the video, we proceed with this. So this is a consolidation area patterns. You have some triangles. You have rectangles. We have ranging zones, but it's the same thing. If you're doing a triangle, you just do this. It's gonna give you literally the same scenario. So sometimes you'll find a pattern that operates like this, some patterns operating like this. So get these patterns that are very common. You'll identify a few of them. So you see the market moving inside at a particular triangular pattern where the price goes like this. So you realize that, this price goes like this. And then the market might break out from the other end and then comes back here and does a retest. So it's the same thing literally. The same thing literally. You can see here, the breakout happens here, and then a retest happens here, and then the market moves this direction. So these are particular patterns that you're going to see. Some are like a flag. Is literally just the same thing. Flags operate like this. I find price going like this. Price is going up, then something happens like this, and then you see something like this taking place. So when the price comes, you see something that like this. Some ranging like this, then price moving inside a particular area like this. So these are flags literally. Okay. And then price comes and then price breaks out of the flag, and then the price comes back to that particular breakout area. What happens, and then the price goes up. So these are patterns that are used for consolidation, and they're very important when you're looking for entries. So such particular patterns. Then also we have support and resistance levels. As you said, the price might be moving like this. So you start realizing that it's a particular area like that. So price is coming to this zone. You can see price is coming down. This zone here is a zone. It's never a particular point, so it's a zone. So as you're going to see, then the price goes breaks out. This is actually this is support. It's a support area. So price comes out like it out there, and then there is then the price goes down like this. So it's literally the same thing. There's always a breakout happens here, and then now we look for entries at these particular areas. Mostly retest for those who are conservative, but for conservative people, we'll wait for this. But aggressive people enter immediately after the breakout. So having said that, we can delve into the charts and see what is there for us. If you can see this, what I was saying. So we can, first of all, we can identify consolidation zones. If they are not so clear to you in higher time frames, you can go to lower time frames. You will always see them. But the more you get to delve into these things, you can always see consolidation zones without much difficulty, because here you have to practice a lot for you to perfect your skill. So so here And see this particular area, you'll see a consolidation of this particular area. Actually, it's a market that is just ranging. You can see this particular area here. Just 2 or 3 positions is enough for you to see these things. So we have, you can see here, the price coming in this particular area, again touching here, touching this, touching this. So this one literally, you can see the price coming down here, going up, coming down here, going up to this particular area, coming down here, and then you see the price goes up here, and then falls a little bit down because of this particular area, which is a resistance zone, and then you see the price going up. Now, interestingly, you might say you don't see breakout here or retest here, but when you come to lower time frames, you will comfortably see these particular zones. So if you're doing 4-hour, if you're doing a 24-hour chart, can comfortably come to 4-hour. You will always see. If you see 4-hour, you don't see. If you don't see anything there, you come to lower. You get into lower time frames until you're able to see, because you will always see them. Let's get to 1 hour, and then you see something here. So here we are. We wanted to see something, this particular area. So you can see when the price came, after the price gets out of the consolidation zone, something happens at this particular area. When you zoom, you can see price breaks out of it. You can see this price comes like this and then breaks out. You can see up here. And the breakout always happens whenever a momentum candlestick forms bigger. You can see when the price, when it comes to this particular area, this particular level, you see a bigger candlestick being formed. You can see this candlestick is it's a bigger momentum happens, and then you see what happens here. Remember, this is always an area, so it's not just one specific point. So you can see price comes like this, and then it gives us a reason to make entry, and you can see the price went higher up. So when the one thing that I forgot saying is that when a retest happens, when the market comes back to that particular area, you have to wait and see which type of candlesticks form at that particular zone. For example, at this particular area, remember, an area that was a support flips into a resistance. An area that was a resistance, once it is broken out, when once price is broken out of it, then it turns to be the other way around. Which, if it's support, then it flips into a resistance. If it's a resistance, it flips into a support. For example, we have so let's say the price is this is support. So the price comes like this, hits it, goes down, hits it again, goes up like this. So it's a resistance zone. But now, when the price gets out of it, then it ceases to be a resistance, and that turns out to be a support. So that's what I mean. So when you see, if you look at it this way, you can easily see the similarity here. So the price comes back to this particular zone. So the price comes back here, and like you can see, the price gets out of here. Then whenever the price comes here, now you start looking at what really happens at that particular area. And so once that happens, now you look at, we have a pin bar here, a bullish pin bar. There's a bullish pin bar, an indicator that the retest is done, is over, and now the price is ready to move up. Mostly after whenever you want to do this, when you're bringing your stop losses into this, remember stop loss is mostly 1 to 1.5, meaning if I'm targeting 30 pips, as my TP, as my take profit, then it should be 1.5 more than my stop loss. So, but mostly we always work, we always target the previous low, or which in this case, the previous low is here. The market is going, we have the previous, the lows and the highs. We have like the market is moving up, moving down, moving up, moving down, like this. Okay, so we have these are lows. The low, this is the low, this is low, this is low, this is low. Then we have the highs of the market, the price moving, making highs as the market structure was bullish. So this is the low. So if we are to enter the price, if say there's a breakout that happens here, then the previous low is this one. So whenever we put our stop loss, we always target the previous low and then we move the market. So for instance, we have here, so for example, in this case here, when we make an entry at this particular area, here, then we have the previous low here. Our target, where do we put our stop loss? So where do we put our stop loss? So we come, so we have a long position. So because we're going long, so long position is for when you want to mark for buys, and then short position is for sell. So you come here, our low is here, so our low, so that our entry point is this particular area where the price is moving, and then our low is here. So we can make the entry there. So for short-term sales, for short-term buys, I mean, we have our target is looking for 1 to 1.5. There's a risk to reward is 1 to 1. So 1.5 is around there. So that's the first our first entry, or our first take profit. The next way to do our take profit, first one, that's the first way to go about it. The second one is to trail your profits. So when you enter two positions, make an entry after retest. The first position, the first TP should be at the price level of 1.06313. Then your stop loss should be at this particular area, as you can see here, around 1.04, so that you have a 1 to 1.5 ratio, risk to reward ratio. Now we have the second way of doing this is to, okay, you enter two trades. So once the first TP is hit, you have two positions running. So once the first TP is hit, then you move your stop loss inside profits. So as you can see here, so you move your stop loss. Let's say you put your stop loss at this particular area. So once you put your stop loss at 1.05, now the first position has already hit TP, and then the second position, now you put your stop loss on the second position at 1.058. So in case the price goes down, in case the price decides to reverse downwards, it will get you out this particular area. And now for this case, you can see the price went higher up, but at the same time, you are trading with zero risk, because if the price goes down, it gets you out, but you are still in profits, because when your entry is at around here, this level here, around 1.053. So 1.058, where you put your trailing stop loss, we call it trailing. You trail your stop loss, trailing stop loss. And now you can see the price went higher up, as you can see, and so you can do you can maximize on your on your profits. As you can see, this one went up to, let's see how it went. You can see it gave us a ratio of 1 to 4 around 4.7. As you can see here, 4.76. So you see, you maximize on your profits, but you are running at zero risk. As you can see, you are running at zero risk. And actually the price really still went higher up, as you can all see. Price went higher up after the breakout, and then that is that. So again, you can still, when the price is still moving up, actually this is a bullish market. As you can see, the market is going up. So generally we are bullish. Generally we are very bullish, and most of the time you can always find more patterns along the way when you are trading this. You can always watch to see patterns. Let's see if you can get more patterns here. You can see, okay, and you do trend lines. Okay, you can see you do trend lines. So this is a price that is ranging within a particular zone. Okay, so these patterns, they form in the market. You can always find them in the market whenever you are trading. So you already know that the market is bullish. So the only thing you need to get to know is to see breakouts happening, as you can see. So breakouts happen here. So you can see there's a breakout that happened here at this particular area. You can see the price was moving within some particular range here, particular confined area. You can see going up like this, coming up there, going down. Then the price came up here, then broke out. Then when you go to lower time frame, you realize that this is a retest, and then the price comes up, goes up like this, and the price moves. So you realize once you make there's a retest here happens here, then your stop loss should be the previous low, which is this particular area. Then the price goes up, comes up, goes up. So we have your stop loss here, and then you target 1 to 1.5. So let's see you can target this. Price entry is here. Stop loss should be here, just here. Then let's see if you can get 1.5. Risk to reward ratio. So your risk to reward ratio happens like this, around there. So you can see this up to here. The first one happens. Then now second entry, you can see it comes back to this particular zone. This is a different particular strategy we'll learn later. And then the price goes up. So because generally the price is bullish, the market is bullish, the market structure is a bullish market, because it's creating high highs, and then you can see what is really happening at this particular area. So for buys, I think the opposite is true for a sell. If you see a sell opportunity, but for now, you can see that the structures are giving us buy opportunities, which is very, very important in this particular area. For sell opportunities, actually, you can see this here. So you can see here, there's a support and resistance zone. You can see this particular area here. The price was coming and going back, bouncing back. You can see price was coming. You see this is this zone, the price goes up. You can see the price coming here. This particular area goes up, comes here, goes up, comes to this particular zone. Remember, it's a zone literally. So you can see it marks up to around here. So it goes up to there. Then you see a momentum candlestick forming. So something happens here. You can see this happens, and then it comes like this, and then you can see. And actually, this one is mostly, I realized that it was news that brings such impact. Then you can see what happens, and then there's a breakout here. So here there's a breakout. Let me give it abbreviation BO. Then there's a retest here, and then now you can see what happens to this price. It actually retested it twice, literally. You can see. So there are retest here, so entry is here. Price comes back to this here, but finally price drops. So your stop loss should be the previous high for when the market is selling. So our previous high should be here. So that is our previous high. Then we target 1 to 1.5, or you can use two. You trail stop loss. You enter two positions. One you hit 1.5. The other one you trail your stop loss, so that you can have maximum. Can have a maximum gains from the market. So I think that's enough for the day. So for those who are scalpers, we don't hold the market trades for long. We use lower time frames like 1 hour, 15 minutes to make entries. And for those who are position traders, intraday traders, those who trade a longer time, they use higher time frames like from 4 hour going upwards. And so this is just one strategy that you can use to trade the Euro USD. Euro USD pair. There are other strategies that maybe we'll use later. This is just one approach. Remember, every trade carries risk, and so your best friend should be risk management. You risk 1% of your account to gain 1.5 to 2 of your account. When you trade your profits, and then you can make a maximum. Or this strategy, you can try it first on your demo account first. Ensure you capture the concept, you internalize and do mastery of the strategy before you think of getting into a real account. You can open free demo account from Deriv, open account with Deriv, and then up to there. I think that's what we have to learn today. And thank you for watching.